Welcome into this week's edition of the Research Corner. I'm Tony Mulvey, joined by Joe Antashak. Joe, how's it going this morning?
It's going great, Tony. How you doing?
I cannot complain. I'm here, and it's honestly one of my favorite times of the year because as a guy who studies the stock market and things like that, really getting into what's going on in the research, in the investment side and the earnings from these companies, really get to see where we are in the cycle. We get management commentary, which is always valuable because these are the leaders that are in the space. They can provide that commentary that's so valuable to what they're thinking, what they're seeing, and we can compare it to kind of our data here at FreightWaves. And one of the data sources we look at a lot that comes out of these earnings reports is from Landstar. It's their BCO data because it kind of gives insight to owner-operator thinking, those leased on, so Landstar with their business capacity owners, those leased on owner-operators for their business model. We like to look at the changes in there, and we've got a chart pulled up here. It's that quarter-over-quarter change in BCOs. What we see is the volatility in it has become extremely more volatile in the past 3-4 years, which I don't think is a surprise given the freight market. But what's interesting is in the fourth quarter, that quarter over quarter change was the fastest decline in BCOs leaving Landstar dating back to 2010. I mean, Joe, when you look at this, what do you think when you see that drop in BCOs quarter over quarter?
Yeah, well, I think the rate of the drop is what's surprising, but the fact that there is a drop is not. I mean, they reported that loads hauled via truck were down about 5.5% year over year for Q4, and then revenue per load decreased 7%, right, compared to Q4. So it's like the loads aren't there, the money's not there, so it makes sense that these BCOs would be dropping out, right? Now, what was pretty interesting to me was that they said that the total truck capacity on their platform grew 7% year over year. So that is somewhat interesting, right? It's not like this capacity is just disappearing from their platform. It's still there. It's just in kind of a different form.
Yeah, and the way we think about this BCO, it's kind of an insight to the owner ops mindset, right? When you see an increase in the BCOs quarter over quarter market, if you look at it and line it up with the trucking cycles that we've seen, when we've seen positive growth quarter over quarter, the market has been in this inflationary environment. You've seen rates go up. There's incentive for drivers to go out on their own, and they do that by going to Landstar and becoming an owner operator, leasing on with them. But conversely, when the market softens, you see them leave, go flow back into the umbrella of a larger carrier or under a forced dispatch model, things like that, where you're kind of seeing that, and you've seen it now. This is the third consecutive quarter we've seen a decline quarter over quarter. I think the interesting part in this is the rate being the fastest that it's been, right? I mean, even compared to 2018, 2019, we only got down to about 2% decline quarter over quarter at the worst of those times. Now we're over 3% down quarter over quarter. I think what's interesting is this, the bottom, and we start to move up from here. I think that's going to be the key. But I don't know. I mean, that's going to be what's interesting. This is kind of that gauge to measure how fast, if you want to gauge it, capacity is leaving the market. But it's not a perfect one, especially because it is lagged. This is data obviously coming from the fourth quarter, but what we'll see is how that reacts as we move throughout this year, especially with their management commentary saying they believe in trucking cycles. They believe it's that 12 to 18 month cycle. If that's the case, basically, if you want to take 18 months starting in Q3, that's where things start to turn back up. If you consider Q1 of 2020, that peak to bottom being 18 months, you're starting early Q3 with that upswing. Other company we want to talk about, C.H. Robinson, obviously the largest freight brokerage in the country. Really kind of this disappointing quarter. I think one thing to call out here is that their gross margin percentage, will pull up a chart, stayed flat quarter over quarter at 14.1%. I think that's kind of a surprise. I mean, obviously, a lot of their miss on the earnings front stemmed from their global forwarding section that was relatively weak. And when you look at what's happened in the ocean market, not really a surprise to see that, especially given spot rates have come down, 80, 90% from their peak earlier in the year. I think some of this, Joe, I mean, maybe we saw obviously changes in management there, obviously still going over the interim CEO into finding a permanent one. But I mean, do you think that global forwarding side is really what stemmed or what caused a management change there?
Yeah, I think that's a really great question, and it, for my money, I have to imagine that that has to be a part of it, right? I mean, we talk at FreightWaves a lot about this idea that, like, has global trade peaked, like this idea of globalization,
Yep.
and it's like, now there's a lot more interest in nearshoring, both geopolitically and environmentally, and I think that you see this in CH Robinson's global forwarding division, right? Where, I mean, the adjusted gross profit for both ocean and air is like dramatically off, right? I mean,
Yep.
it's 40 to 50% for both, and that's where their real pain points are. At least in this last quarter's results, their truck brokerage was okay. Adjusted gross profits were actually up, but anyway, Biesterfeld, potentially that shakeup is a result of kind of a strategic shift, perhaps, maybe away from global forwarding. I guess we'll see.
Yeah, I mean, for sure, it seemed like for quarters and years, really, that global forwarding arm was that growth arm, that lever that the management team was trying to pull. And all of a sudden, when things softened in that market, it was a lever that ultimately snapped. So, Joe, thank you so much for joining me today on this week's Research Corner. Right now, we'll take a quick break. We'll be back with more FreightWaves Now.